Okay, thanks for joining us. The reason why we're sending this out to everybody is that with the recent events and the announcement that there's going to be some mortgage forbearance going out there, we've been getting a lot of questions as to what exactly that means. First off, you should obviously be contacting your lender to see how they're going to handle it, but there are a couple different ways that it can be handled by them. And unfortunately, they're getting inundated with so many calls and emails and questions that they actually are having a tough time getting the information out. So we thought it might be a good idea to bring on one of our lenders, Chris Brady with Draper and Kramer, and he's going to kind of go over the different options that your bank might present and give you a better picture of what you can expect possibly with a mortgage forbearance. So Chris is going to give you some of that information now.
All right. Wonderful. Thanks, Bill, for having me on here. There's a lot of question and a lot of answers that aren't being answered, unfortunately, with regards to forbearance. So really what it means is that it's an agreement between you and your mortgage servicer to have your payments deferred in some fashion. Now, it doesn't mean that your payments are forgiven. It just means that they give you what they call a forbearance period. It could be a couple months, could be 6 months, whatever it is the agreement comes up to. Now, the thing to be considered here is that, number one, if you are granted a forbearance, and it's very difficult right now to get through to the banks because of the inundation that they have, the fact that they have people working from home, and just the volume of people that are out there. And a lot of the banks really don't want to do the forbearance because it puts them in a tight position as well with regards to their obligations to making the payments to the investor side, the bonds, and also for your taxes and insurance as well. But if you find that you want to look into it, obviously contact your servicer. They'll send you an agreement, which I recommend you read very thoroughly. And what they're doing is, let's say you're going to get delayed payment for 3 months. First off, they're going to require that you pay them in a lump sum after that 3 months, plus any interest that has accrued. And so let's say that over that 3-month period, you're going to owe $10,000. The way the agreement's going to be written up is they're going to say on that date that it's due, they're going to require that $10,000 plus interest. Now, they put some language in there, and most of the ones that I've seen, that they may consider a payment plan, but there's no guarantee on it. And the danger here is that if you don't make that payment in full, what they ask, and if they don't give you that extra period, Bill, it's a lot of things for people to look out for, is, they could call the note and actually start foreclosure proceedings. So you've got to really be careful as to what you're looking at. Now, it should be mentioned that if you find yourself in a real financial pinch here, if you've been furloughed, if you've been laid off, if you lost your job as a result, and the prospects of work are going to be, put off for quite some time, then you have no other option. Please, take advantage of the forbearance. It does not get reported negatively on credit reporting as being late or otherwise. But what happens is, if you do take a forbearance, we're still crafting it as an industry as to what the requirements will be, but it could be treated in a sense as if you might have been late, even though you technically weren't. And they may require that 12 months go by, so 1 year of total free and clear payments be made. That may impact your ability to get further financing, whether it be housing, cars, whatever the case is. So it may be treated as if it was a late. So that's something that's still being worked out and still being considered. Bottom line is, talk with your institution, see what their terms and conditions are. There are a couple institutions that I'm hearing, not many, that are tacking it on to the end of the loan. So when you go to pay it off, they're helping you out there. The majority are not. They're requiring either a full payment, and maybe if you're lucky, they'll do a payment plan. So please take a look further into what those requirements are. And honestly, if you can afford to make your mortgage payments during this time, do it. Some people want to look at it as if it's like, hey, I get a break here. You're not. It will catch up to you. So just please talk to them and really, think about it. And then, of course, reach out to your professionals, reach out to Bill. You can reach out to me, of course, or whoever you trust in the industry to give you some guidance as well.
All right, Chris, thanks a lot for that. And then obviously, your company is obviously doing refinances right now. And we can do that virtually without having to get together, correct?
That is correct. Yes, we are doing refinances. Mortgage rates are in a good position, and we are still fully operating. And we have closing agents that are doing this. They're doing a virtual closing, so we're keeping the safety during this time frame. But if it makes sense for you to, and you are currently employed, you're not furloughed, and you're looking to save money, yes, refinances are absolutely occurring at this time.
Okay, Chris, thanks a lot. Again, I hope this helps everybody. I know there's a lot of questions being asked out there and not a ton of answers, just because obviously the situation is a bit chaotic. if you have any additional questions about anything, whether it's for Chris or myself, feel free to reach out to us and we'll try to get you the best information we can. Again, stay safe. Hope this helped everybody. Take care.
Thank you.